Welcome back to another episode of Don't Waste the Chaos. Today I have a unique interview, and it's one that several of my listeners have been asking for, and so I'm super excited to bring on another guest with me today. Now, this guest has over 25 years in real estate and investments. He's served over 10,000 clients when it comes to helping them with their mortgage. He's got specialties in VA home loans and so many others, and I'm so pumped to have him with us here today. But I would be leaving a large part out if I didn't share that this is my husband, Kerri Roberts. He's also a 10-year United States Marine Corps veteran, and he has been my partner when it comes to becoming a multi-millionaire in life. And both of us started from the ground floor when we met each other. And so we've got a ton of things to share today. I know that we could talk about why it is that we left the city and decided to move to the country and become more self-sustaining. And we could talk about what we've done to invest in our marriage and make sure that we've got a healthy marriage, whether it's been through co-parenting, his children from a previous marriage, or our biological child together. We've got a lot of areas that we can go into, and we will over upcoming episodes. But today I specifically want to talk about real estate. There's a ton going on in the market right now. There's a lot of noise. And so I would love, I just would love to have Kerri on here to talk to you about whether you're doing real estate investments or you're looking to maybe sell your home or you're looking to purchase a new home, the thoughts that he's having, the things that he's seeing, the interaction that he's having with real estate in general, and what he's viewing in the market, because he's watching the market every single day. So if you would please welcome Kerri to Don't Waste the Chaos. And why don't you start out by telling us a little bit about why you got into that, considering obviously I talked a little bit about your background. It did not start in real estate, of course. And so why did you land there, and what are you seeing right now? What do you want to share with my listeners?
Thanks for having me, Kerri. This is a first for me, and I'm excited to share as much as I can. Hopefully it's relevant, helpful information for all of your listeners out there. How I got into real estate, it goes back 25 years to when I bought my first house. I was 20 or 21 years old, and I was active duty still, and I used this loan program called the VA home loan, and that's all that I knew. It was a brand new house. It wasn't even completed yet, and I don't even know what my credit score was. I really don't even know if I qualified. To be honest, I really had no business even committing to a 30-year mortgage at that time. That's how little I knew about what I was getting into. But I learned really quick that it was a good move, because real estate, especially American real estate, it's a fantastic opportunity to invest in. They're not making any more of it, and American real estate values are slowly getting to the levels of international real estate values. So if any of you who've been looking to, buy your next primary home or looking at investment properties, by now that home prices, whether it's for condos or single family residences or just land, it's higher than it's ever been before, and it's probably not ever going to go back down. So I learned real quick after I bought that first house 25 years ago. I sold it 2 years later, and I made $30,000 off of it. And I didn't even have to make a down payment to buy that house. That got my attention. That's what generated my interest in starting to learn more about real estate.
Yeah, absolutely. And, whether you're risk adverse or you're more comfortable with risk, which I would say, like, I'm a little more risk adverse, even though I'm getting better in my entrepreneurship, or if you're more comfortable with calculated risk, like Kerri, real estate is a great place to get into, but not prematurely. So talk to us about what the indicators are and how you know that you are ready to start moving into this direction.
Yeah, so always be thinking ahead. At least think ahead. It doesn't cost you anything to do that. You know how much money you have in the bank account. You know how much money you have that you're paying towards your debt on a monthly basis. So think about those numbers and think about how long do you think it might take you to generate some savings that is at least enough to make whatever a minimum down payment would be, whether it's for an investment property or your first or next primary home. That would be the first step. Pay attention to your credit score. Anybody can get a copy of a credit report for free without any strings attached. If you go to a site called, there's freecreditreport.com or annualcreditreport.com. Those sites won't actually tell you what your credit score is, but they will tell you and provide you a copy of your Experian, your TransUnion, and your Equifax credit reports going all the way back, I believe, 7 to 10 years. So you can at least see what's on there that shouldn't be on there. Do you have any old credit cards that are still active that you're never using that you might want to close? Do you have any judgments or liens on there that you don't know about that could be hindering your credit score? So if you're thinking that it might be a possibility you'll buy an investment property or a regular house that you might move into, or a second home, even in the next year to 2 years, you want to start looking at your credit report now and preparing, no matter how prepared you think you are already, so that when that time comes, you're going to be in the best situation possible as far as having cash down for a down payment, having reserves set aside in case something goes wrong with the property. And the list goes on. Interest rates, the higher your credit score, the better option you'll have for interest rates.
So I'm curious. So when someone goes on and does one of these credit reports, how often are you working with a potential buyer and they are shocked by something they see on their credit report?
Yeah, it's at least half the time. I'd say very few people, when I'm having a conversation with them, I've seen over 10,000 credit reports, and at least half the time there's something on there that they forgot about, they didn't know about, or something that was on there that never should have been. And then we start the dispute process with the credit reporting bureau and the creditor. And unfortunately, I would say 90% of my clients, if not higher, by the time they contact me because they want to secure financing to purchase the property, they already found the property and they're wanting to make an offer, which means they need to close in the next 20 to 30 days. So it's extremely stressful when you wait until the last second to do that. So I always recommend find a lender that you know and trust. Even if you have absolutely no intent to buy a house anytime soon, let's say it's in a year or in 5 years, establish a good rapport and relationship with a lender. Let them pre-approve you, which basically just means they're going to look at your credit report. It's not going to negatively impact your credit score by them doing that and pulling your credit once a year. It's a mortgage inquiry. So it's not a consumer inquiry like an auto loan or a credit card loan or a cash loan. It's a mortgage inquiry. So that way, that lender can get a good idea of where your financial strength is, where your financial opportunities are, and they can give you some pointers so that you can begin preparing. So again, you are in that best situation possible when the time comes for you to make an offer on a home.
Okay, so maybe I want to start this process. What am I looking for? Am I just trying to find like a buddy that I know, or what am I looking for when you say I should develop a relationship with a lender? How do I even go about that? Should it be at my local bank? What am I searching for?
That's a really good question because there are thousands of lenders. And I would imagine almost anybody watching this knows a real estate agent. Real estate agents know lenders because they recommend them on a daily basis. That's their job. But keep in mind, just because a real estate agent recommends a particular lender, that does not in any way mean that that's a good lender or it's the right lender for you. So a few things to look out for. Lenders, loan officers are heavily regulated. You have loan officers that work as a broker. So a broker loan officer has upwards of 100 different lenders that they can pull financing from to help you to help, I guess, help you establish the best finance option for you because there are a ton of them out there. Then you've got loan officers who represent a bank. And then you've got loan officers who represent a mortgage company. And what I look for is just ask the loan officer, how many loans have they done in the last 6 months? And you can always go and check to see how many loans they've done in the last 6 months and if there's any legitimate complaints that's been filed against them. So every loan officer is tracked by a number called a NMLS ID. And because every single loan officer has this, you'll see NMLS ID numbers that go up to 7 and I think maybe 8 digits now. So the lower that number, my NMLS ID number, I'm actually obligated to say it whenever I'm talking about loan origination, is 397987. So it's a 6-digit ID number, which means I've had that 6-digit ID number for a long time. And that can imply that I have a lot of experience doing mortgages, but it could also mean that I've only done one loan a year for the last 15 years. Whereas somebody with a NMLS ID number that's 7 digits could be doing 30 deals a month and actually have more experience than me.
Okay, so we're looking to see if there's experience. And we're basing that off of that NMLS number. Otherwise, what else are we looking for when we're trying to find a good lender?
See if they answer their phone. And if they don't answer the phone, or how quickly do they call back? In this market where it's really slow, almost half of the loan officers that were in the industry a year and a half ago are gone today. So if that loan officer doesn't answer the phone today, that I would think that would be pretty indicative that they're not going to be super responsive when you really need them, especially when time comes for you to make an offer, or after you've made an offer and your offer is accepted and you're in processing and underwriting. Time is of the essence. You need to get that deal closed. And if they're not responsive, or if they are responsive, but they're just not really ensuring that they're answering your questions, that might be something to consider in moving forward and talking with another loan officer.
Okay. So I know you're not a real estate agent, but you've worked with a ton of realtors out there. And we have friends that are realtors. Like we love a lot of realtors, but I also, I hear you talk and you've got a lot of experience with a lot of different, qualities of realtors. And so talk to me about, what we're looking for in a realtor when we're trying to make one of the largest financial purchases of our life. Okay. So, and before you even start on this, like, think about what I just said. You're purchasing cars, you're purchasing handbags if you're me, you're purchasing a lot of things. A home, these are large purchases. Terry and I just sold a home personally for about $1.5 million. Our current property is about over $2 million. We're talking big purchases here, but even if your home is $170,000, that's a large amount of cash. And I see folks just kind of going with their buddy who's a real estate agent who's maybe only done a deal or two. So what would you recommend based off of all of these like 10,000 plus realtors that you've had experience with? What are you recommending to my listeners as far as what they should be doing on their due diligence here?
Yeah, that's another really good question. And I see a lot of clients, they get paired up with real estate agents through Zillow. And the way that that happens is they find a property on Zillow that they like. Well, real estate agents, they pay money to Zillow to be represented on Zillow associated with various properties at various price points. And one thing to know is if you're driving down the road on a weekend and you're looking at homes and you see an open house sign in the yard of a home and you go in that home, that real estate agent who is showing that home, they're the listing agent. They're the agent that is representing the seller. If you already have an agent that you know and like and trust, but you don't have that agent with you when you go in that home, you will have likely just obligated yourself to work with that listing agent to represent you as the buyer, as well as that agent will represent the seller. That's not necessarily unethical, but it does mean that it's going to be impossible for that agent to look out for your sole best interest because they're also representing the seller. So when you find the agent that you like, that you know, that you trust, before going into any open house, just make sure you have that agent with you. So just like with loan officers, if somebody recommends an agent to you, call them, see if they answer the phone. How responsive are they going to be? Because it's going to be just as important that they answer your questions and they get back to you in a timely manner. And by timely manner, I mean same day, unless you're trying to contact them at 10 at night. There are some agents out there that will answer the phone at 10 o'clock at night or midnight. Those are the good ones. If it's an agent, in my opinion, that is only serving as a buyer's agent, they might not necessarily have as much experience as those agents who are really hustling and doing listings as well. But ask around, look at the Google reviews, and you're going to get a good idea of how long that agent has been in that area, which is important. Do they know that area? What are people saying about that agent? Ask that agent for references. Can you call their previous clients and see how it went with them? Those are just a few pointers. You can also just have your lender. So a lot of people get confused on this. It's almost backwards. They decide they want to buy a house. Then they go to that house and they want to make an offer, but they haven't talked to a lender to verify whether or not they're even qualified to buy that house in the first place. And if they are qualified to buy that house, they have no idea how much the monthly payment's going to be. So the first step is to find that lender, get pre-approved so that that lender's answering all of your questions as far as the financial side of things goes. Once you have that pre-approval letter, that's when you can start looking for those homes.
Good points. And I would say that actually speaks to something that I see from a business perspective almost every day. So we've got multiple aspects to our brain, right? And the part of our brain that gets all amped up and excited, maybe stressed out, wants to make a certain type of decision. So I remember one time, T owned a home. I was still renting. He was trying to sell that home, and we had the home on the market. Then there was a shooting on that street. Yeah, we used to live in a rough area, and so there's a shooting on that street. Our real estate agent said, take it off. Like anybody who's going to Google, which people freaking should Google the area, by the way, if you're not from there. But anybody who's going to Google is going to see that this home had a shooting literally two doors down, and you're not going to sell this thing or you're going to get screwed on pricing. So take it down. So we took it down. Terry took it down for about 6 months, put it back on, and we were like, is this going to sell? We had no idea. When he went to DC for work, we're not married yet, and we're like getting so much activity on this house. We were mind blown. Darling little home, rough hood. So he's out of town, and he's like, you better look at houses for me while I'm gone. So I'm getting online, I'm looking, and I narrow it down to a few homes. I go to this home. You guys, it's on a lake. It's beautiful. We were talking about, maybe getting married. And so I start picturing like a wedding back there. I call him and I'm like, I'm sitting in a porch swing at this house. And he was like, first of all, like, get off. That's not our get off the property. Like, you can't be just cruising around in somebody's backyard, even though I was like, they'll be fine with it. But he was like, do not fall in love with that house, Kerri. Like, we don't know anything structurally about it. I don't know anything about it at all. Like, get away from that property. But you and I both know, like, I was falling in love with that home, and I was going to be very disappointed if we didn't purchase it. Now, spoiler alert, we did purchase it, but we ended up leaving it after a few years because there were tons of sex offenders around it. And it was at the beginning of a cul-de-sac. People were driving really fast around it. I had an emotional attachment to it. Now, I still think it was a great decision. We made a lot of friends, and we didn't make the decision quickly, even though I wanted to. This guy made me slow down, and it was a large purchase, and I didn't want to be on the loan yet. We weren't married. So he was like, slow down. This is a very big purchase. We need to think this through. Now, a lot of times we get caught up in the real estate market because of the amount of homes, small amount of homes that are on it, or large amount in the competition. And so we want to make quick decisions. But I think what I hear Terry saying is slow down in this process. Think about the financial aspect to it first. That's why you would start with the lender and figure out what you can even afford before you go down this path, and start letting your heart connect to your decision-making process. Because really, when we sleep on it, a different part of our brain activates and we're able to think a little bit more logically. So what else would you recommend when someone's getting ready to make a real estate purchase, whether it's a personal purchase, primary home, secondary home, or investment purchase? What else should people be thinking through?
Yeah, so just like real estate agents work with a lot of lenders, lenders work with a lot of real estate agents. So once that lender pre-approves you, it's totally fine to lean on the lender for them to recommend the real estate agent. They can give you two or three. I've worked with 3,500 different agents, and I can tell you that maybe 5% of those agents are the really good agents. Not because they're bad people, not because they're lazy, but a small percentage of those agents are actually full-time and have been doing it for a long time. And the lenders will know who those agents are. So feel free to lean on a lender for those recommendations.
Yeah. Ooh, let me pause for just a second there. When you're talking about recommendations that you can make or other lenders can make for a real estate agent, talk to me about this. Is something that I've heard some controversy around. So what about when you mentioned that a real estate agent can recommend a lender? Recommendations one thing, steering's another. Talk to me about any legislation that buyers should know about this.
Yes, so it is illegal for a real estate agent to, quote, steer a client to a particular lender. And unfortunately, it happens all the time. And it's not just because that agent and that lender have a good working relationship. A large percentage of the time, especially in markets right now where it's super tough, lenders get the majority of their business through real estate agents. But the real estate agents don't all just give that business to lenders just because they're nice. There's money involved. And so a couple things to look out for, and you are more than at liberty to ask your real estate agent or ask your lender what is the type of relationship that they have. So I mentioned Zillow. So real estate agents and lenders do have the opportunity to split the cost for Zillow leads. And there are some brokerages out there that are spending 20, 50, $100,000 a month in these leads. And if the real estate agent can get the lender to help pay for some of those, well, in exchange, that real estate agent is going to try and make sure that those leads get sent to that lender. That's steering. That's illegal, but it happens all the time. Another scenario is if a lender rents space in that real estate agent's office. And typically it's implied that that real estate agent or that brokerage or multiple agents in that office need to send all of their business to that lender in exchange for that lender paying a monthly rent to reside. That's illegal. It can't happen, but it happens all the time. So that's just something else to look out for.
So it's not illegal, right? What I hear you saying is it's not illegal for the lender to help pay for the Zillow leads, and it's not illegal for the lender to rent the space. What's illegal is the steering aspect. Is that
exactly,
right?
Yes. Okay. And I don't pay for leads. I don't want to pay for leads. And I don't want to spend money on office space with an expectation of the realtor or the brokerage sending me business. Number one, it's illegal, and number two, I don't want anything. I want the relationships with the agents that I'm working with to be purely organic, and it is 100% relationship. There's no money transferring back and forth in exchange, which is what makes it illegal. It is to provide leads to one another in exchange for something of value.
And we all know, like, the relationships are huge, whether you were talking real estate or insurance, which is my background, or any other industry. Relationships are huge, but we just want to make sure everything's on the up and up. And essentially, if a realtor, a friend of mine is listening to this, I would say, I love that you've got the relationship, but please make sure that you're getting the right deal for your client and understanding their financial aspect, which you may understand some of it, but not all of it the way a lender would. And so just making sure, I mean, Terry, do you see that? Do you see people steering toward a lender that can't even get them the best deal? What's been your experience there?
I see it happen all the time. I can't prove whether or not they're steering. I could prove that they're steering. I might not necessarily be able to prove that they're steering to a lender that can't get the best deal because I don't know the deal that lender is offering. But something else to ask for. This wouldn't be for an investment property, but if you're going to buy a house and the lender's telling you, yes, just make 5% down and it's a conventional loan. Here's your interest rate and you're good to go. But they don't actually present other options. Like, are you a veteran? You might have a VA loan option. If you do, you're going to be way more better off. It's so much more financially advantageous the majority of the time to use VA financing instead of conventional. Or if you're not a veteran, they should be presenting you the option for an FHA loan, because unless you're making a full 20% down payment. But there's a ton of options out there, and I guess the summary of that piece is, if the lender is not asking you lots of questions about your financial goals and your timeline and your down payment, and how much money you have set aside for closing costs and your budget, and they're not presenting you different loan options as a result of the information that you're providing them, you might want to check with a different lender, because what that means is that lender is going to be recommending to you the loan that they're most comfortable with, which might not necessarily be the best option for you when you're making one of the largest purchase transactions of your entire life.
Gosh, preach. This reminds me of my insurance days when a good insurance advisor or agent is going to ask a ton of questions. Like, I'm sure, I can't imagine. And if you are an insurance specialist, like, congratulations. I love that you're a business owner and you get that. Most business owners don't know what they need. What they need is an advisor or an agent to help them understand what they need. So same deal. If an insurance advisor or agent isn't asking you a ton of questions and they're just like plopping you into a certain policy and not digging into your future goals or your growth opportunities, that is red flag. At minimum, yellow flag, pump the brakes. Like, you need somebody who cares about your business just as much as what Terry's talking about as far as a lender perspective, truly understanding your financial goals, what you're wanting to do, what your spouse's situation is, and where you're trying to get to. Those all matter. And so there are so many of us in a lot of our businesses, we get comfortable with one product and we just try to steer toward that one product, and it might not be the best fit for the client. So I love that. All right. So talk to me about, Things that you're seeing when potential buyers come to you, what are things that you get asked over and over again that you're like, gosh, people do not understand this and they really should?
The most common question I get is, I just want to see how much I qualify for. Um, yeah, by far, that's the most common question that I get. The downside to that is, by the time I'm having that conversation, that client already has a realtor and they already made an offer on a home or are getting ready to make an offer on a home, which is creating a whole bunch of stress for that client because they don't even know if they qualify. They might, most of the time they do, but they, just because they qualify, that doesn't necessarily mean that that's going to be with respect to their budget. Are they comfortable with what they qualify for? And those can be two very, very different numbers. That's probably the most common question I get. As the client is going through the process, when I issue the pre-approval letter, I will proactively talk about closing costs and down payment, out-of-pocket expenses. And what I can tell is if that client has been recommended to other lenders before I spoke with them, I can tell that those other lenders are not talking to them about those things because they're surprised, they feel overwhelmed, and sometimes they kind of feel deflated a little bit because they didn't realize they're going to have to bring $10,000 to close. Or they have to pay $800 out of pocket for an appraisal tomorrow because they just signed a contract today. Those are probably some of the more common questions. A lot of clients don't realize that if you make $40,000 a year just in overtime alone, say you're an RN and your base is $65,000 or $70,000 a year, and you earn $40,000 in overtime, but you've only been doing it for 1 year, the lender will likely not be able to count your overtime because you haven't been receiving that income. That's called variable income, the overtime income, for at least 2 years. If you're a business owner, same deal. You're likely going to be filing your income taxes one of two ways. It's either going to be on your personal return, and your business income will be listed out on your Schedule C. And even if you have $1 million in revenue, that's fantastic. But a lot of small business owners, they like to capitalize on the opportunity of being a small business owner, and they deduct as much expense as they can. Well, that bottom line ends up being next to nothing, which means even though you had $1 million in revenue, you have virtually zero money for qualified income for a mortgage. So you can't get a qualified, you're not going to qualify for a traditional mortgage. It can't happen, which is another reason why you want to start that conversation with a trusted, known, reputable lender potentially years in advance, especially if you're self-employed, so that they can learn more about your financial situation and have you set up for success when the time does come for you to make an offer on, your next primary home or second home or an investment property.
That's a really good point. I will say when we set up, I started out as a sole proprietorship and then moved on to an S Corp. And Terry and I have recently, when I say recently, we're coming up on 4 years that we bought a 140-acre farm in Northeast Missouri. And we've built that home. We've sold our other home, which was in Columbia, Missouri. And so we know that we don't have a goal of purchasing another home. Now, we do have our real estate investment company, which we'll talk about on another episode, but we don't have another home that we're looking to purchase personally for a while. So when I looked at what I want to pay myself, or what I want as a draw to myself, or owner distributions, like all of those things don't necessarily matter as much for me as far as like investment purchases, personal investment purchases, does matter for us for our personal budget. But all things that need to be taken into consideration, even just from setting up a business perspective. So, Terry, anything else that you'd add from like a business owner or a 1099 contractor?
Same deal. So for the business owners out there, if you're not filing your business income on your personal return, you probably have a C Corp or S Corp, and you'll have K1s on your personal return that represent the income from your self-employment, but it's a separate tax return setup. The lender will look at that as well. So even if you are an S Corp and you're paying yourself, $5,000 a year as a share, but $250,000 a year as W-2, that can be one way to get around it, but the lender is still going to want to make sure that you've had that business up and going for 2 years, and on the business tax returns that your bottom line is still showing a net profit after paying all of those salaries, including yours on W-2.
That's good. Well, we could talk about this all day long, and you can only imagine what our dinner table and date night conversations look like because we are both really focused on business and financial success. And part of that is, and we'll talk about this in our marriage episode, we know that financial constraints, financial stress is has a huge impact on the success of a marriage. And should that be the case, I mean, like, we could talk about should, would, or could all day long. It does have a big impact and can have a big negative or positive impact on the success, the happiness, and the flow of your marriage. And so these conversations are important, whether a business owner or a business professional or someone looking to start an investment company. But I hope that you tune back in the next time that I have Terry, because we're going to go deeper into real estate investments. And essentially, we'll talk about what we did to start our company and what we've done, the different pivots that we've made, and the success and the difficulties that have come along the way. But Terry, thanks for joining us today. How do people get in touch with you if, not even if they're looking to purchase a home, but you obviously have a ton of knowledge in this area. So how do they get a hold of you?
Yeah, on Instagram, TikTok, it's Mortgage Tip Daily. So it's not plural, it's tip, T-I-P, Mortgage Tip Daily, or mortgagetipdaily.com. All my contact information is on there. Feel free to follow me. I try and make a daily post and make it as relevant as possible for anybody that's even just thinking about the real estate industry. Hope that helps.
Yeah, that's very good. Thanks so much for tuning in today. And as you know, always in business, there's chaos. We know there's a ton of chaos in our finances as well. Don't waste it. Take it as an opportunity. Embrace it. Thrive in it. Until next time.